Still continuing with that sectoral review, let's look at the banking sector now, especially after that impressive result from UBA, and waiting, of course, other results from the other, members of that, the banking sector. We're doing this with the Managing Director of Optimus by Afrinvest, Dr. Ayodeji Abel. Dr. Abel, good morning and welcome to the program.
Yeah, good morning. It's great to be here.
Great. So how would you judge the performance of the banks in the first quarter, looking at the numbers, the movements at the stock market, and the recap activities, which is still going on?
Okay, interestingly, I'll say it's two mixed bags, if I would say that way, because it started on a very strong note. We saw the banks rally significantly with the anticipation. People were expecting positive results, and we later on, towards the end of the quarter, which we are just approaching, we saw a little bit of corrections because investors has anticipated and also factored in the expected dividend. So you would see that with the release, when we say the figures, that's the top five banks, UBA leading that pack yesterday. Investors had already also priced in the expectation of that dividend. So while it started on a very strong note, the excitement, but investors trying to look at the dividend yield, when you see the dividend yield or based on the dividend that was paid, would mean that not very attractive at that level. But for historical holders, yes, it's really going to be attractive for them. For those that bought 1 year ago, 2 years ago, would get a dividend yield of close to about 30, if not 40% for some of them. So I think that for the banking sector, it's been a very mixed quarter for investors.
Yeah, so can we judge from UBA's result, perhaps most of at least the figures, do you think their results will follow this trend?
Yeah, so I'm optimistic that they will follow the trend. So if you look at part of what has characterized the result, you look at the UBA result, interest income, both core and non-core businesses grew significantly, and it's easily traceable to the increase in interest rate environment. The MPR was increased by almost 8.75 basis points, 8.75% rather, last year. So that also helped the interest rate environment, and the banks benefited from that. So, and you look at it, UBA, for instance, what we call CASA, the current account, savings accounts for about 88% of their total deposit, which means that they're enjoying low cost funding. And as a result of that, they're able to benefit from the high interest rate environment. We feel that other banks within that sector will also follow that trend, and it's also going to be positive. So you see PAT of close to about 766 billion. That's really positive. One of their, I think, their highest so far. So it also states something about investors that have the ability to stay for the long term. And I think that it's really a positive one. And we saw that impact reflect on most of the banking stocks yesterday, though it was short-lived.
So with this now, well, bearing in mind that this is the result for full year 2024, can we say that the days of FX losses, in reports, can we say that perhaps we're getting close to the end of it?
Yeah, I would say that yes, because it's when we look at what is responsible for the FX losses is the significant depreciation of the naira. So what we're seeing now is when you look at the last 3 or 4 months, the up and down has not been, if you put plus or minus 5%. So that is really manageable. So we may not be seeing those huge FX losses, and that this is also what is also sending positive sentiment to consumer goods. A lot of them, even the FX losses, head into their shareholders fund. But with the stability that we're seeing within the last 3-4 months, that would also be a thing of the past.
All right. So how would you say the banks have been doing? We saw MFBN Sorry, they're no longer even holding. First hold call now. Oversubscription. That was, I think, late last week. So looking at the recap journey, which I think will end about this time next year, how do you think they've been doing, the banks?
Yeah, with the publications or with the analysis of the result of the offers, both those that did rights and those that did public offer, it's been very positive. And what we're also seeing is a lot of also strategic investors also taking positions in some of the banks, those that see long-term prospects. So with part of what I think led to this success is the electronic public offer that was introduced, and that's really helped for a lot of the retail investors to participate, working with thanks to the NGX for enabling this. So allowed a lot of retail investors to participate. So I think that the journey so far on the capital raise has been positive, with looking at First Bank, the oversubscription around the right issue, and also the private placements that they also announced that they will also be raising. So that is also going to be positive. We provide significant funding. You know, currently banks are going through, when you look at the cash reserve ratio of about 50%, liquidity ratio of about 30%. So most of the deposits that the banks get, almost 50% has to go to the CBN. It means that, and when you also factor in liquidity ratio, there's less for lending. So buffering, when you also support your capital with this long-term capital, they would also be able to lend and able to participate in long-term lending, which would also give improved and impressive return in the medium to long term.
All right. So, what do we expect in as we end this quarter? We've seen the stock market down on most of the sessions this quarter. What can we expect for the second quarter, and what can we see as a drive to rebound in the market?
I think what the market would be waiting for is to also see the first quarter results, which will also be due by end of this quarter, and that means by next month we'll be seeing the first quarter result of most of the banks. So that would also help significantly in shaping direction of the banks. So we also expect that once that is also very positive, the downside risk that we expect that we see this year is the reduction in interest rates. You know, like the banks benefited from that hike in interest rate last year. With the expected reduction in interest rate this year, that would also douse the expectation that the performance would be significantly higher. So for us, I think maybe we'll just be looking at single-digit growth rates. It will still be positive. Banks have always been able to know how to weather the storms, no matter how tough. We always see them finding ways for them to be able to navigate the choppy terrain. So it's still for long-term investors, when you see prices that when those banks are trading at very cheap prices, better to lock in and buy for long term. So just to wrap up on this, when you look at UBA, for instance, 3 years, 4 years ago was trading at 510 naira. Sorry, I think around 10 naira. So with a full year dividend of 5 naira. So if you have, if your cost is around 10 naira, even is at 20 naira, you can see the annual return that you'll be getting on your stock on a yearly basis, which is significantly higher than inflation. So these are ways that people build wealth. These are ways that you can hedge your portfolio against inflation by buying for the long term.
All right, looking at the long term, thank you so much, Dr. Ayodele, Managing Director, Optimus by AfriInvest.
Thank you for having me.